Hi, Lightning eMotors. It's a company that designs, manufactures, sells electric vehicles. Market cap is reaching 500 million. The trading is happening almost 90% below the site's estimated fair valuation. Earnings are forecasted to grow hugely, 75% per year. Revenue grew already almost 200% per year. Snowflake analysis shows that future checks are 5 out of 6. There's also risks, has less than 1 year of cash runaway, negative shareholder equity, volatile share price over the past 3 months. And if we take a look at the latest price and events, so there was they entered the index, there was board change, shelf registration, and that is leading to the market performance. Actually, this they had the IPO back in July, and somehow it's not showing here the current situation. Basically they are all-time 3% up, and yeah, they had this volatility on the market. Anyway, 90 days minus 13%, not beating the industry, neither the market. Long-term price volatility considered as lowest because they don't have the volatility for the compared to relative to the market 5 year, and industry itself is pretty volatile. So US machinery volatility beta 1.25. Valuation side, fair valuation based on simple Wall Street should be around $61 per share. Tip ranks has not that big forecast, or the price target of 12.5. That means almost 20% upside. And so there's analyst rating consensus showing moderate to buy, 4 buyers and 1 sells. And Market Watch shows pretty similar stock price targets at the highest point 17, on average 13.17. And it's all with the growth that is today's 63% currently. So that's a lot. Basically, based on last day's close, it was the $6.41 per share. Future growth, so this is pretty huge, 75% forecasted annual earning growth. That's a huge growth. And also the earnings per share growth is forecasted as well as to grow. They might become profitable in the next year, but it's more likely within 2 years. Basically, that's just forecasted from the analyst. Past performance, so we see last year's earning growth. Basically, the earnings have been decreasing by 256%. So last earning report shows that 65 million on the negative side. Revenue is growing 12.9 million. So actually this is actually the company that founded in 2008. They are currently on the market. This is reasonable, but of course the better earnings, the better stock price, and they could possibly not dilute or take debt for the company. So basically, currently the company is unprofitable. Financial health side, we see this is pretty serious situation because negative shareholder equity, which is decreasing, and level of debt increasing. So the company within the, if they have this kind of movement on the earnings side, if they invest a lot of the money to the research and so on, to so basically they need, rather than take debt, or they could just print shares out to take the money, but it's diluting the shareholders. So that is happening, and if it continues, let's check this one. Yeah, shares outstanding keep increasing. So basically they had last year 3.6 million, currently 4.1 million of shares. And so basically this is not good situation. Of course they could raise some capital, and that could affect straightly to the equity, and they somehow need to manage the level of depth. So basically they have high level of depth compared to equity, and also negative shareholder equity, which is very serious situation. There's a lot of risks. Balance sheet. So basically this is yeah, I think this is not showing right, because the balance sheet doesn't look, for me it's not correct, because they have the high level of depth, which is red, and I think when the equity is on the negative side it turns the green. So basically I think the side doesn't show the real situation of the company. They are not paying dividends, and on the insider transactions, no volumes. Ownership breakdown: public companies holding 40%, private companies 20%, general public 18%, insiders 9%, VC peer firms 6.3%, institutions 6.2%. Top shareholders, there's no fresh data. Basically the last reporting holding date 8th of July, but that is the current situation, so we don't see the changes here. So basically we see BlackRock is here, Vanguard is here also, with not so big of amount of investments, so 16 and 10 million. Also, let's check this one. Finviz shows that it has the double bottom, and also the volumes are getting very highly up since compared to previous weeks and months. So it's the biggest volume of the 1 year frame, and basically 100 million current today. And yeah, there is possibilities that if there would be good news, good finance, if they manage to somehow refinance the structure of balance sheet, it will be help a lot. So the fundamentals are also important for the company's growth, for the future of the company. And but I still believe that this is accurate analyzed price, so 12.5, and also the what is showing the market watch. Shares outstanding keep increasing, as I said, and total sales are increasing as well, with high sales growth percentages. So basically compared to last year there's almost 200% growth, so that's a lot. If they continues, of course it will affect on the price very positive way. And investing.com summary the stock for long-term investors as a neutral, moving average as a buy, technical indicators as a sell. And let's have a look at some of the comments. Probably not everybody know yet about this $850 million agreement. Final rocket, big contract, time to fly. So maybe there's some announcement about the 850 million deal. I'm going in at a 9. Whether or not in. Yeah, so basically if they have this kind of contract, it would help a lot. But anyway, thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.